Price Headley 是黑利投资和 BigTrends.com 的创始人，他的著作《Big Trends in Trading》也是亚马逊图书的畅销冠军。他也经常做客 CNBC、Fox News、Bloomberg 等财经媒体，分享他最新的投资理念。今天我们有幸请到 Price Headley 本人为我们解读一下最新的投资趋势。Hi Price, how are you?
I'm very good. Thank you for having me.
Thank you for joining us. Well, congratulations on your successful speech, My Favorite Strategies for Weekly Options. So I want to ask you, do you think the weekly options can protect the short-term long position for like Apple or Google?
Absolutely. I mean, we recommend weekly options for all kinds of different strategies, whether it's for protection with a put option, whether it's for creating income off of the stock that you own, or whether it's for just creating a position when you don't have one yet and you'd like to get exposure to an Apple or a Google. So it gives you so many different choices. Weeklies are clearly my favorite trading vehicle.
That's good. And is it risky to trade weekly options?
It can be, especially if you don't educate yourself. So we always advocate getting educated first. That's why we do these talks, to try to share with people how to learn more about weeklies. But once you start to understand it and you use proper money management, that is, you don't get too much money into any one trade, you can control your risk based on the amount that you invest.
Right, right. So for individual investors, what's the big difference in trading options compared to the traditional stock trading?
Good question. A lot of people assume that they can just buy an option and hold on to it, but it's very different than a stock, because an option is an expiring asset.
Right.
So eventually it's going to hit an expiration. If it doesn't move and you bought an option, it's not going to have benefited you. It might hurt you. So our view is that you want to find trends, that is, meaningful moves up or down, and that's where option traders can get leverage against what the stock is doing. So the trend phases is where, as an option buyer, you tend to make your best results.
Thank you. Next question, I want to ask you about Alibaba. Since Alibaba's stock price has hit a new bottom low since its IPO, the earnings were not good and the lawsuit has scared some investors. So what is your advice on trading Alibaba's stock for like those investors who are already trapped in Alibaba? How can they minimize their loss by option strategy?
With options, I mean, obviously, people have to decide what's the right long-term strategy, but with options in the short term, Alibaba had a bad earnings reaction, and with that news you mentioned, but bottom line is they could be selling a call option as one strategy to generate extra returns and extra cushion against further losses. So for example, if the stock's at whatever, $90 for a round number, and you sell a 90 call, you might be able to get $400 or $500 per contract for the next several weeks to a month out, and so that way you could be getting maybe 5% a month back while you're waiting for the stock to recover. So it's a strategy. The cover calls is what that's cover call writing, or selling of that cover call is what that's known as, and that's a way that you can moderate the volatility of a situation like that if you believe in the long-term story and you think it can come back eventually, but it might be bumpy in the meantime. Cover calls is a really good way to go.
Right. Alibaba's stock is having its lockup period ends on March 18th, I think. So do you think there will be more selling on Alibaba stock?
Yeah, I think that's a concern. So getting through the lockup is always a concern with any of the IPOs. You got to remember, I mean, even like Facebook, when they IPO'd, the stock dropped in half after the IPO. So coming off of IPOs, usually there's kind of an excitement that has to cool off a little bit. But obviously, I would suggest that yes, after the lockup, it probably is a little bit better time to consider it. But we're still got to work off the effects of that earnings. The earnings was one of those that a lot of times will linger until the next earnings report, and the next quarter would probably be the big next event to watch, I would think.
Right, thank you. Last question I want to ask about Apple. Since Apple's stock price has hit an all-time high, so what kind of option strategies can investors use to hedge their risk in trading Apple stock?
Okay, that's a good one. So basically, if you like the stock but you're worried that maybe it's too high, then what you can do is what we call a caller, which means you sell a call, but then you use the proceeds of that call to go buy a put. So that way you can actually, if you think it's going to basically not go up too much more, but you think it could go down a bunch or it might just flatten out for a while, then you basically can do that for relatively little to no cost. So the collar strategy is a wonderful one to look into for people who have good gains, don't want to, for tax reasons or otherwise, don't want to sell just yet, and they can still maintain their stock and then protect it and hedge it within a defined range for very little to no cost.
Okay, thank you. Thank you so much for joining us.
Thank you very much.